Hey everyone, welcome back to Corporate Decoder. Today we're diving into Reddit's latest quarterly report. Let's see if their financials are as upvote worthy as the cute cat pics on the platform. Are they finally profitable? Are users still hooked? We'll find out, but before we do, buckle up as there will be some volatility with these numbers. This is Reddit's financial checkup for the first 3 months of this year. It's like a report card, but instead of grades, we get dollars and cents. It covers everything from how much money they made to the challenges they see ahead. Let's jump straight into the good stuff, the money. Reddit's got $625 and $75. That's quite a bit more than the $562.1 million they had at the end of last year. It looks like they know how to save their acorns. And looking at accounts receivable, they're holding 326 their acorns. And looking at accounts receivable, they're holding 326 to 21 million, which is slightly less than the $39 at the end of last year. These numbers are pretty 950. Went through how to save their acorns and looking in dollars at the end of last year. These numbers are pretty high, but they show stability in the company. Another real test revenue, Reddit raked in $392 and $4 million. That's way up about $150 million more from the $243 million they brought in during the same period last year. This huge leap likely is because of new streams of income coming in and better ad sales. Hold on to your hats, they actually made money. A net income of $26.2 million, a giant leap from the whopping $575 million loss last year. That's quite the comeback story. Seems like they'd found a way to make those cat videos pay. For every share, they earned $0.14. Last year, they lost $8.119 per share. This shows real recovery of the company. They have $127.6 million from operating activities. That is way better than the $32 million from the same period last year. Okay, let's take a quick peek at how Reddit's equity, their ownership structure, has changed. It's like checking who owns the biggest piece of the pie. In a nutshell, the share amounts have changed due to stock conversions and some stock options getting exercised. They have a solid amount of future cash coming in because of agreements that last more than a year. It all adds up to a promising future for the company. So what about potential future shares that could flood the market and dilute the value of existing shares? Basically, there are quite a few shares waiting in the wings, mainly in the form of options and restricted stock units, but they weren't included in calculations because they could have actually reduced the earnings per share. This can be a good sign of potential future growth or a canary in a coal mine situation if things don't go well. Most of their revenue comes from ads, about $358.6 million from other revenues, which include things like content licensing and premium subscriptions. This shows diversification, which is something Warren Buffett likes to see in his companies. They keep a good chunk of money in safe investments. It is a generally safe but not very profitable strategy, which keeps the company running even when the economy is rough. The money they owe in the short term is pretty well balanced, and it's composed mainly of salaries and short-term contracts. Like any big company spanning across the world, Reddit is dealing with all the complexity with export controls, which might restrict to which countries Reddit is accessible, which is a risk. Reddit needs to keep some Class A common stock available to pay to employees. This is a must-have tavern now. Let's put on our Warren Buffett hats. What does all this mean? Is Reddit a good investment or not? Here's my take. Reddit's had a stellar quarter and bounced back. They finally made a profit and their revenue is way up. They're getting better at turning users into dollars. But it's not all sunshine and rainbows. They still have a ton of competition, and a lot depends on whether Redditors keep creating content. They need to manage their costs carefully, and they have to tread lightly with international regulations. On the other hand, their other revenue is becoming more of a thing. They have lots of savings and are exploring AI and all the new technologies. Overall, the financial results point towards a good company, and I would look into it further if I was an investor. I would probably wait for a bit to get the real price of the shares once the volatility is done. That's all for today's Corporate Decoder. If you found this breakdown insightful, hit that like button, subscribe for more deep dives, and tell me in the comments what company do you want me to analyze next.